The topic today is on foreclosures. In fact, the word foreclosure is one of the hottest topics that we're faced with in the real estate business today. If you go on the internet, you'll know that if you Google the word foreclosure, you're going to come up with a myriad of different sites to visit, and it is in fact one of the most Googled words today in real estate. Every buyer we talk to wants one, but the question is a foreclosure right for you? In the next few minutes, I want to spend some time helping you decide how to pursue a foreclosure and if in fact it does fit into what you're most interested in. There are really a few terms I want to talk about today. One is pre-foreclosure. Another term that you may have heard of is short sale, and then of course just a pure foreclosure. A pre-foreclosure is something that you've probably seen listed in the paper. If you turn to the back of your local paper, you'll see in some cases hundreds of pre-foreclosures. Those are the ones where the owner of the property has been missing payments and the bank is giving notice to the world that they're about to take this property back. Also, you can find out about pre-foreclosure simply by word of mouth. You may have heard of a friend, for example, who knows of someone who's not been making their payments, and that's really considered a pre-foreclosure. What you need to know about when you begin a negotiation with someone who is in pre-foreclosure, you're typically dealing with and negotiating with someone who's very emotional. Most people don't want to be in foreclosure, and it certainly is in some cases very embarrassing, and it does become an emotional decision. Another type of term we talked about earlier was on a short sale. A short sale typically occurs when the property in an area is beginning to decline in value, and in some cases the property is worth less than what's owed on the mortgage. Declining values is typically, again, what causes a short sale. When you begin negotiating on a short sale, it can be a very, very long negotiation because you're negotiating with two parties. You're negotiating with the actual owner of the property, but you're also trying to find out whether the bank is going to allow the sales price of the property to be less than what's owed. So it can be a very, very long process. We've seen examples of buyers who've gone under contract for a short sale. They believe they're going to be closing on the property, and in some cases just days before the closing they find out that the lender on that property, the original lender, won't in fact allow the sale to go through because the net proceeds of that sale is actually less than what they're looking for. When you are in fact negotiating on a short sale, once again you're dealing with two parties. You're dealing with an emotional seller, and you're also dealing with a lender or an institution. Another type of opportunity, of course, is a pure foreclosure. A foreclosure is bank or institution owned. Some of the things you need to know about a foreclosure is that should you be interested in one, you're typically not going to receive a disclosure. In today's real estate market, on most properties that you might be interested in, you would be able to receive a disclosure of the condition of that property. But when a bank owns the property, keep in mind they've never lived in the property or never used that property, and so they truly don't know what is functioning and what isn't within the property or the home. Also, should you buy a foreclosure, you're actually going to be getting at closing a special warranty deed instead of a general warranty deed, and there are some differences. Little more risk with a special warranty deed. A general warranty deed is the one that we are most familiar with and the one that you normally would receive when just purchasing a property from a traditional seller. One of the positive things about a foreclosure, in some cases, the banks that are holding these properties, they're obviously motivated to sell them, and in some cases you'd be able to receive more favorable terms on financing through a bank that owns a property than if you were just to go to that bank to get a loan on a traditional resale. So there are clearly some positives. But one of the questions that you want to find out is the property that's foreclosed upon truly a value? Most people do pursue foreclosures because that's the perception, that they perceive they're going to get great value when they purchase it. But here are some of the things to consider. The first of which is, in addition to the price that you pay, what repairs will you have to make on the property? Often a foreclosure will have some deferred maintenance. Keep in mind, if the previous owner wasn't able to keep up the mortgage payment, they typically haven't been maintaining the property as well either. So what are some of the repairs that you might have to pay for? Frequently with a foreclosure, you're going to find that the property was previously listed for sale. And here's the question I always ask is, why was it rejected by the marketplace? In other words, if it had been listed for sale for several months or 6 months or a year, why is it that the market rejected it? Was it truly just not a very desirable property? Another thing to consider is if the property was new construction. Often the land costs of a home or a property that was recently built might have been at one of the highest levels we've seen in historic times. Additionally, construction costs over the last few years have been very high. So it might be that that home was priced at such a high price point that truly it isn't worth that amount anymore in today's dollars. How does the price measure up against other available properties in the area? And that's something else to try and find out. Often a seller may have more equity, a traditional seller may have more equity in their home than the bank would in a foreclosure. And so especially in resort market areas, such as the one that our company is located in, you'll find that traditional sellers may have purchased their property quite a while ago. They may have put down a significant amount of money when they purchased. They may have a considerable amount of equity, and when you're seeking out motivated sellers, you may find one where you can actually find a better value on the property than you would on a foreclosure. Here's the bottom line. I believe that the only way to make sure that a foreclosure is the right move for you is to sit down with a professional in the area you're seeking. You need to spend some time with that realtor, find out a little bit about what is the inventory like on the market, how many listings are available today, how many of those are foreclosures, how long have some of those foreclosures been on the market, and what other types of properties might be available that might be more suitable to your specific needs. You know, at Coldwell Banker High Country Realty, we're one of the leaders in foreclosure sales in the marketplace, and what we've discovered over time is clearly the foreclosure can be an excellent purchase for some people, but it's not right for everyone. And so we would encourage you to sit down, spend some time with a realtor that's either an acquaintance of yours or will certainly be willing to help in assisting you to find out whether foreclosure is the right answer for your specific situation.